Hello. Welcome to the Mychal Raynes channel. I'm Mychal Raynes. Today I'd like to talk about how to make better investments. A lot of times folks will come up to me and ask me what I think about this particular investment or this particular company or what the economy is doing. And usually after talking with them, what folks are really wanting to get out of it is how to make better investments. So I put some thought, a lot of this has been on my mind lately. I like to share some of these ideas and techniques with you. And let's just get right into it. Let's take a look. The first one is buy low and sell high. Almost every time when somebody asks me about a particular investment, I ask them, is it cheap? And cheap could mean a lot of things. Cheap could mean it's a new company, right? Or it's a new investment, so you're getting in early and you feel like because of that it's cheap. Cheap could also mean it's small, so it doesn't gather a lot of attention and maybe could be in an undervalued asset because just lack of attention and the size. And then oftentimes when you want to buy low, there's some sort of distress in the company, whether it's accurate in the economy or not is what you might have to discern when you buy something that's low. And usually when I get asked on an investment from a novice investor, they're asking me about a particular investment that's been in the news a lot. It's at an all-time high. And they're like, Mychal, well, what do you think of this? And like, man, that you're buying something at an all-time high to sell it down the road higher. And I think that's a difficult thing, especially for a novice investor. So one of my strategies in investing, I've been investing since 2003. I've had a lot of success with it. I always try to buy low, or what I think is low. And then when it gets a higher valuation, I like to sell. So this is kind of a checklist I go through on an investment and some principles that can guide me to make better investment decisions. And that's got to be the top of my list is buy low, sell high. And everybody says it, right? Like how do you make money? Well, you got to buy low, sell high. But there's a lot that comes into that. You're going to have probably a stomach for buying a distressed asset or buying something that's in the dumps or taking a chance on a newer investment. Or maybe you think that it's already like a large company, but it doesn't have the pizzazz or attention that a competitor has, and you want to bet against that in the economy. You think like, well, I'll go with this company that everybody thinks is second best, but they have solid numbers. And so buy low, sell high. The next one for me is diversify. And when I mean diversify, I don't just mean in the stock market. If you want to make better investments, you're going to be put in different economic conditions. And, in a bull market, everybody can make money. Like how could you not make money when times are good and there's a prosperity in the land and everything's going up in value, and there's no major problems on the horizon. Everything goes up. But if you want to make better investments, some things I like to think about, if an inflationary environment happens, how could I capitalize on that? Or how could I protect myself from it? Same thing, like say recession. So if a recession were to occur, is this something that I can take advantage of? Have I positioned myself defensively enough to where I'm okay with whatever happens? So diversifying makes you much more well-rounded and makes you survive. You look at the tech bubble that we had in the 90s. A lot of those investors, let's say the day traders, that was a really popular thing. Many of them didn't survive. They were kind of, I want to say like one trick pony. That's all they knew. And when it crashed, they lost everything. But if they had some foresight, I'm sure some of them did. I'm just speaking in generalities. But if they use this principle, they might not have lost the farm. They might not have lost everything. So definitely keep my mind on diversifying for different economic conditions that can occur. Here's something that I rarely see people do. I think this is what separates maybe say like an intermediate investor from a novice, is when you start investing for a reason. For instance, let's say I invest in a mining company and they're about to open a big mine or increase production. There's a reason I'm investing. I'm expecting something to occur. So I'm not just willy-nilly putting my money in places and crossing my fingers for the best. I have intent behind every decision that I'm making. So when I look at an investment, I always ask myself, what are the reasons I'm willing to risk my capital, in this particular investment? So, excuse me. So investing for a reason can really up your skill set in investing. So after investing for a reason, leads into the next topic, which is you have to ring the register. Once you make money on an investment, or the reason why you invested comes to fruition, you haven't made anything until you sell, right? So if you buy some shares in a company, let's say, and it triples in value, well, you could look at it, I made all this money. You haven't made anything. You still own that many shares. It's just right now people are willing to pay, more for the shares that you already own. So in order to make money, you're going to have to exit the investment. And, a lot of times I see investors, they just hold on too long and they don't want to ring the register. And if you invest for a reason, which was the last point, it's easy to ring the register because you have a plan in place. Another thing is to find out what you can take risk-wise. So maybe you don't know. Maybe you've been in mutual funds your whole life and you don't know if you're a good stock picker, or maybe you've only picked stocks and you've taken some losses and you're just afraid of investing altogether. Well, until you try a couple different things, you're not going to discover about yourself what kind of investor you are and how much risk that your appetite can take. And this can change based on your age. But there's so many factors that go into this, where you're at in life, how much your portfolio is worth. So it's something that's really personal. And unless you sit down with an advisor, if you want to go it alone, it's something that you're going to have to figure out, kind of your thermometer of what kind of risk can you take. Can you be in penny stocks? Are you, maybe you're only comfortable in the largest dividend paying stocks, or maybe you decided annuity is the way to go for you and you want something ultra safe. And there's nothing wrong with that, but it's good if you want to make a better investment and you want to figure this out. You're going to have to find out for yourself where you stand on that, or sit down with somebody and discuss it. Another thing folks don't realize when they're investing, something I always try to keep in my mind, nothing lasts forever. The way things are today isn't necessarily the way things are going to be tomorrow, or in 5 years or 10 years. So a lot of times it seems like people's frame of mind is, well, I'm going to invest in this and it's going to be able to do that, and the trend's just going to continue forever. Well, just look back in your own life. How many crashes have occurred? How many different, especially now, just look at all the different opportunities to invest that weren't even around 20 years ago. Companies come and go, different real estate markets come and go. Things in the free market and in the economy, they're always in a change of flux. So you have to bet on change and realize that the way it is now is more than likely not going to be how it is in the future. So, I keep that in my mind. Nothing lasts forever. I'm always looking for the change and trying to find the angle on the change. Here's a good one. When you always are having success, say like in a bull market, sometimes the confidence can kick in and you think that you're doing something special investment wise, and you're not being really honest that everything's going up. Let's say for instance in like a bull market, or you start thinking you can get complacent. And one way to fight that is just to always stay learning. You know, even if you read an investment book, you don't have to adopt ideas and principles, you know, in the book you're reading. Or, you know, say you watch my video, I don't have to change your mind on any point, but you're taking in information, ideas, you're being open to that. And the fact that you're being open to new things investment wise, and new concepts, and reading new economic reports, or reading the numbers that come out, you know, looking at economic indicators, the fact that you're doing that is it's gonna fight some of that complacency, and it could even humble you to the point where, you know, some danger is in the back of your mind, especially if you've been winning over and over and over. And this is when people get reckless. Basically, they've been winning. You know, their investments have done well. They think they have it all figured out, and it goes to the last point, right? Things change, right? Bet on change. Well, something changes, and they're sitting there holding the bag. So, you know, always stay learning. And it doesn't have to be my channel, but if you're liking this video, feel free to subscribe. But just stay active mentally. You know, something I like to do is to play through different economic scenarios in my head, and like what it might look like. Even if I'm not accurate, even if I'm not in the ballpark, keeps me on my toes, keeps me fresh, keeps my approaches and angles to things fresh and interesting in my mind, and it allows me to have a wider, I'm not so tunnel visioned in, I have a wider perspective. And by doing that, I think you can get into our last tip, which is in investing, sometimes it's just as important what you don't do as what you do. So I don't have to hit a home run on every investment. There's been great investments that have come that I haven't taken advantage of, but I guide myself on my own principles and knowledge that I know, and I make the best decision that I can. And that's all we can really do in investment. If you're going to make a personal investment and you're not paying an advisor for it, and you're kind of like an independent investor, what more can you do but take the information you have and the things you know and make a decision? And a lot of times the decision not to invest in something can protect you, and you're not falling for every new thing that comes out. You know, I flirted with the idea, for instance, to get involved in the cryptocurrencies, especially when they crashed, you know, a few months back. Thought, man, now might be a good time, and maybe it is. Maybe they go up and it's fabulous, but there's just still, I have a couple reservations and hang-ups. For instance, one major thing that holds me back from cryptocurrencies is there's nothing tangible there. So in my head, it's hard to conceptualize any kind of value. Basically, I would just be buying something and hoping tomorrow I can just sell it to somebody for more because there's some scarcity involved. Well, I don't need that kind of scarcity to invest. You can look at the commodity market and do the same thing. You can look at, the energy, you can look at almost anything and find the same scenario. So if I just am only going to invest in cryptocurrency because of scarcity, then I'm kind of fooling myself, because that's my only motivator and my only reason. Then I can find that elsewhere. And, so using some of these principles might hold me back. Doesn't mean in the future that I won't invest in cryptocurrency, but it's just an example that sometimes what you don't do is just as important what you do. So I appreciate you spending this time with me on this video. I don't have a set schedule, so if you want to be notified when my videos come out, feel free to subscribe and you'll find out when videos come out sometimes. But if you want to find out when videos come out every time, there'll be a gray bell next to the subscribe button, and if you click on that and it enables your notifications, and you'll receive a notification every time I make a video. So appreciate you all of you, and I look forward to the next video. So thank you.